Genting Plantation Berhad, or known as Ascetic Development Berhad, is one of the fast-growing plantation companies listed on the main board of Bursa Malaysia. This was founded by the late Tan Sri Lim Gohtong in 1918 and listed in 1982. Presently, the company owns 12 oil mills, including 1 in West Malaysia, 6 in Sabah and 5 in Indonesia. While the oil palm plantation businesses remains the main activity of Genting Plantation, the company expanded their businesses into property growth, downstream manufacturing, and also biotechnology. Nowadays, the chairman of Genting Plantation is General Datuk Seri Diraja Tan Sri Dr. Muhammad Zahidi bin Haji Zainuddin. Sarawak Plantation is one of the developer players in the oil palm and was incorporated in 28 October 1997 in private limited company, but then changed into public company on 2000. The company is mainly involved in farming and dealing out of oil palm into basic palm oil and palm seed. As at 31 December 2020, the group owns 60 oil palm estates and runs 2 palm oil mills. The core businesses of this company are growing, farming and organization of oil palm plantation on a great scale. Next is plantation management service and also provides strategic investment of change in NCR land into oil palm plantation. They also operates a seeds production and seedling and provide laboratory and technical services for the oil palm industry.
Assalamualaikum, my name is Muhammad Nur Farhan. Today I will discuss about the balance sheet and income statement for Genting Plantation in 2020 and 2021. For balance sheet, the total asset is 8,440,753. Same goes to total equity and liabilities. It's total about 8,440,753. For income statement, the profit for the financial year for Genting Plantation is 251,229. For balance sheet and income statement for Genting Plantation in 2021, the total assets is about 8,763,950, and also total equity and liability also same, 8,763,950, so that's increasing than 2020. And the income statement, the profit for the financial year is about 470,447. So
my name is Muhammad Farhan and I will be explaining about Sarawak Plantation Berhad balance sheet and income statement for year 2021. For the balance sheet, the total asset is 974 million, and for the total equity and liabilities is the same, which is 974 million. For the income statement, the profit and total comprehensive income for the financial year is 128 million.
Moving on to Genting Plantation Berhad ratio trend analysis for the year 2020 and 2021. The first ratio is liquidity ratio, which consists of 3 ratios. First and foremost is current ratio. The current ratio for 2020 is 3.33 times, whereas for 2021 is 2.98 times. It is lower than the year 2020 current ratio, but it appears to be good. In this case, GENP current ratio in 2021 is more able to meet its short-term obligations than in the year 2020, since the ratio is more than 1 but less than 3. Next is quick ratio. In 2020, the ratio is 3.12 times, and in 2021, the ratio is 2.76 times, which is lower but can be considered as good. GENP's quick ratio in 2021 is less than 2020, but the company is still able to pay off its current liabilities without selling any long-term assets, since its ratio is more than 1. Lastly, 2020 net working capital ratio is RM 1711713, whereas for 2021 is RM 1667051. This shows a poor result as it is lower. GENP experienced a lower ratio in the year 2021 compared to the year 2020. This can be further explained that the GENP current assets such as cash on hand has decreased. Next is leverage ratio. GENP debt ratio in 2020 is 40.32%, whereas in 2021 got 65.49%, which is higher than the year 2020. GENP performance is not good in the year 2021 because most of its assets are financed through debt and involved with high risk as compared to the year before. Secondly, debt to equity ratio. The year 2020 got 67.55%, while in the year 2021 got 39.57% for the ratio. It is considered as poor because 2021 ratio is lower. Technical insufficiency may occur, in which the company is unable to manage the debt by efficiently investing in the assets required. Furthermore, times interest earned. In 2020, GENP experienced a total of 8.46 times, while in 2021, a total of 17.38 times occurred, which shows a good result as it is higher. This indicates that the company has an ability to pay for interest payment due to higher times interest earned.
We move on to activity ratio. The company's average collection period in 2021 is less than in 2020, as it is 32 days and 37 days respectively. This indicates a good improvement in terms of ACP from the company, as they are able to collect its accounts receivable in a shorter time period in 2021. For the company's inventory turnover in 2021 is slightly lower compared to their ITO in 2020, which is 11.99 times and 12.60 times respectively. This indicates that Genting Plantation is experiencing some issues which lead to poor performance in terms of managing its inventories to generate sales due to lower ITO compared to their ITO in 2020. The company's fixed asset turnover in 2021 is 0.50 times, which is higher compared to 2020 that only gained 0.42 times. This indicates that the Genting Plantation is more efficient in generating sales from its existing assets in the year 2021 rather than in the year 2020. The company's total asset turnover in 2021 is 0.36 times, which is higher than 2020 that only gained 0.30 times. This shows that Genting Plantation is going towards a good path as the company is more efficient in managing its total assets to generate sales compared to their 2020's performance. For profitability ratio, the company's gross profit margin in 2021 is higher than 2020, which is 31.02% and 21.29% respectively, which indicates that the company gets higher profit after deducting with direct costs in 2021 rather than in 2020. The company's operating profit margin in 2021 gained higher than their OPM for 2020, which is 24.03% and 15.30% respectively. This indicates that the company has managed to get more profit to pay its operating expenses, such as wages, raw materials, etc. in 2021 rather than in 2020. The company's net profit margin in 2021 is 15.03% higher than their NPM in 2020, which is only 10.06%. This indicates that Genting Plantation is generating as much profit after deducting all costs in 2021 compared to 2020 due to higher EAT. Genting Plantation has more asset efficiency in terms of return on asset in the year of 2021, which is 5.37% rather than in the year of 2020, which only gained 2.98%. This indicates that the company is able to earn more money through the asset investments they have in 2021 than in 2020. The company's return on equity shows an improvement in 2021 than in 2020, as its ROE is higher in 2021, which is 8.88%, compared to 2020, which is 4.99%. This indicates that the company is able to pay more profit to its shareholders from their investment in 2021 than in 2020.
Last but not least is the market ratio. The earnings per share of GENP for the year 2020 is RM 0.28, while for 2021 is RM 0.62, which is higher and good. In the year 2021, GENP has higher profit allocated to each outstanding share of common stock than last year due to higher EPS. Besides, the dividend payout ratio during year 2021 is 50%, which is lower than the year 2020, which is 53.57%. GENP had a low dividend payout ratio in 2021, which indicates that the company is saving a substantial percentage of its earnings for future growth. Lastly, for price earning ratio in year 2020 is 0.75 times, whereas in 2021 is 0.58 times. A lower ratio indicates that the company's investors are less willing to pay per RM of current earnings during the year 2021.
Hi, my name is Faridina and I'll be presenting about liquidity, leverage and market ratio. So firstly, based on the liquidity ratio, we have identified that the current ratio and crude ratio for Genting Plantation, which is 2.8 times and 2.76 times respectively, is higher than Sarawak Plantations. This indicates that in 2021, Genting Plantations had the greater ability to meet its short-term obligations and had more capacity to pay without relying on liquid current assets compared to Sarawak Plantation. Genting Plantation also had higher net working capital than Sarawak Plantation, which is 1,667,051 ringgit, and for Sarawak Plantation is 99,717 ringgit. It shows that the liquid position for Genting Plantation is better than Sarawak Plantations because Genting Plantations has a bigger firm size. Next is based on the leverage ratio. We have identified that debt ratio and debt to equity ratio for Genting Plantation, which is 39.57% and 65.49% respectively, higher than Sarawak Plantations. However, although it is higher, it indicates that Genting Plantation had poorer performance compared to Sarawak Plantation, since most of its assets are financed through the debt and involve high risk, and Genting Plantation is also unable to manage the debt by efficiently investing in the assets required. Meanwhile, for time interest earned, Genting Plantation is higher than Sarawak Plantation, and this is good, where it indicates that the company has higher ability to pay for interest payment due to higher times interest earned compared to Sarawak Plantation.
Next, I will be presenting the comparative analysis for activity ratio. Genting Plantation customers took longer period to pay back their debts compared to Sarawak Plantation, as shown by the average collection period. Genting Plantation inventory turnover is also very much lower than Sarawak Plantation, as this could be due to the lower sales of the company or the company is maintaining too much inventories. By looking to the fixed asset turnover and the total asset turnover ratio, Sarawak Plantation has a better results than Genting Plantation. On the whole, Genting efficiency is very poor compared to its competitor Sarawak Plantation. Profitability ratios, on the other hand, shows that the Genting Plantation gross profit margin is higher than Sarawak Plantation, probably due to the higher sales and lower expenses. And Genting OPM, which is the operating profit margin, is higher than Sarawak Plantation, which is 24.03% than 21.03%. Genting Plantation return of asset result was appearing lower than its competitor, which is 12.57% lower than Sarawak's, and its ROE is also lower than Sarawak by 19.30%.
Lastly, based on market ratio, we have identified that for earning per ratio, Genting Plantation, which is RM 0.42 cents, is higher compared to RM 0.46 cents. For Sarawak Plantations, this indicates that Genting Plantation has higher profit allocated to each outstanding share of common stock than Sarawak Plantation. Meanwhile, for dividend payout ratio, Genting Plantation is also higher than Sarawak Plantations. However, it indicated that Genting Plantation isn't able to maintain its reasonable level of dividends compared to Sarawak Plantations. Then for price earning ratio, Genting Plantation is lower than Sarawak Plantation. This indicates that the Genting Plantation's investors are less willing to pay per RM of current earnings.
For the conclusion, for overall performance, Genting Plantation is in good condition. This company is operating in a good position more than 75% of the time. There are only few ratios that they need to improve on to ensure their success. For the liquidity ratio, Genting Plantation is not able to meet the short obligations. This means they're able to pay their current liabilities, but somehow it has only a little cash on hand, and they might give a negatively effects to their company profitability. For the leverage ratio, Genting Plantation is not good in terms of the ratio. Although they has a bad in the term of the ratio, they still can pay the interest payment as long as the amount of interest earned is higher. Activity ratio, Genting Plantation is on good term in collective the accounts program. But this company has issue managing its inventory. It's maybe that the company has a bad management. For profitability ratio, Genting Plantation has good condition in every term of the ratio. Okay. Indicating this company will earn more profit in 2021 than 2020. It shows that this company is successful in terms of profit.
Assalamualaikum, and my name is Muhammad Farhan bin Muhammad Rizal, and I will be explaining about recommendation. So the first of all is to maintain its profitability ratio, the company needs to prepare a strategic plan with 1 to 3 years goals so that the company can predict any unexpected event that will happen. Genting Plantation also can conduct a customer satisfaction survey online to get feedback from them. Make sure the sales are increasing every year to get a good performance. Next, for the liquidity ratio, the company needs to increase cash on hand as to avoid interruption in production by increasing its sales. To maintain its current ratio and quick ratio, make sure to pay off the current bills of the company. For the leverage ratio, the company needs to pay more attention as debt will make it a high risk. Debt is important to secure a loan that the company makes, so the company should always pay their debt on time, and it also links with sales. This means the company needs a higher sales to ensure the company has money to pay debts. For activity ratio, the company should collect its account receivable on time to maintain average collection period. Lastly, for the market ratio, the company should increase the earning per share to ensure the company is willing to pay per ringgit. That's all from me.